I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews, we have back with us Kyn, the CEO of Minterest. Kyn, welcome back to the show. It is a pleasure to see you again.
Oh, thank you so much, Ashton. It's always a pleasure to chat with you, whether privately or over video like this. So excited to be back here. There's plenty to talk about.
So much. And since we last spoke a couple months ago, you and your team started launching Minterest DeFi campaign on the Mantle Network layer 2, which looks like it's a huge success. I want to dive into that, dive into the intricacies of DeFi and what makes Minterest a unique DeFi protocol as well, and how DeFi has evolved over the past few years. And how it's becoming easier and easier for people to get involved, but also capture more fees and make it more efficient. And I think with the Bitcoin ETF launch here, and probably soon Ethereum ETF, institutions are going to become very interested in DeFi as well. And that could push a lot of capital into the industry. So I feel like it's a very good time to be learning about DeFi. I would love to start off our conversation for those who didn't hear our previous interviews or aren't exactly familiar with Minterest on exactly what are you and the team building at Minterest, what makes it unique in DeFi, and then we'll dive into all the details.
Sounds great. Sounds great. Yeah, the ETF news is very exciting. Finally, we're here. How many years have we been talking about this? Anyway, yeah. So Minterest, we're building a DeFi lending protocol. You can think of it as a bank for crypto users. Essentially, that's how I like to think about it. Where normally people will be having crypto assets in their wallet, but they're sitting idle. And in the real world, it's like basically having cash and stuffing it inside of your mattress. Like we don't do that anymore, but in the blockchain space, that's still kind of there. So the idea is put your money to work, and you can then essentially deposit your crypto assets into Minterest. And what essentially that does for you is you get to earn an interest rate, because as a basic banking infrastructure, the whole point of it is you have somebody who has idle assets and you have somebody who wants to borrow it. And so in this case, that's what Minterest does. So you deposit your assets. Someone on the other end is looking to borrow your assets and willing to pay you an interest rate. That's a simple part of what Minterest is doing. And so lending has been a massive part of crypto over the last couple of years since DeFi summer. Compound and Aave, they really innovated or launched this thing at the very beginning, and we've seen the proliferation of DeFi lending across every chain, particularly right now with so many L1s and L2s launching. They're everywhere. So Minterest DeFi lending protocol, but we've built a much better mousetrap. So the idea is that we analyzed lending protocols a few years ago when we were designing it, and we identified that lending protocols, they're very important, but they're really capital inefficient. Largely what happens is with most lending protocols, they generate tons of fees. Aave in particular, over the last couple of years, has generated hundreds of millions of dollars of fees. But those fees are all extracted from the system. They go to third parties, they go to the owners of the protocol. And so what we were thinking about when we designed Minterest is what would happen if those fees actually came back to the users? What would actually happen? Effectively, your yield, your interest rate as a lender or as a depositor would actually go up. And as a borrower, the cost of borrowing would be lower because you're receiving those fees back. And so effectively, the way I look at lending protocols today is that though we see a market interest rate, it's actually suboptimal. You should be earning more or you should be paying less. And that's what Minterest has done at a high level.
I think that's a great start and explanation. And there's definitely a lot of people, especially ones that are just getting in through the ETF. Maybe they're becoming more orange pilled. They'll buy some Bitcoin spot, they'll buy some Ethereum spot. And once they're holding crypto and they're like, I'm holding this for the next 3 to 5, 10, hopefully plus years, might as well be putting it to work as well. Lend it out and getting interest on top of the appreciation of the asset already, which I'm pretty bullish on myself. And so I can imagine that it's a good time to be having a DeFi protocol that has that's sort of more innovative. Aave, as you said, has been generating hundreds of millions of dollars. I feel like it's also just getting started. DeFi summer, it's been a few summers now. And there's still more capital coming into DeFi. And I feel like there's cycles, there's a new interest in Bitcoin right now with new players. And probably in the next 12 to 24 months, they're going to get very excited when they see what they can get by introducing those assets into something like Minterest. So from what I understand, from what I understand, with the new mechanisms that you're mentioning, it's like if there's value being generated in a DeFi protocol, you want that to be reinvested into the protocol to help grow it and make it more efficient. And if it's like, I don't want if I'm investing Ethereum and supplying it and getting an interest, I want that to be over the years becoming better. And I don't have to pay attention to it, but the yields are going up, not down.
Exactly right. And so what Minterest does in order to enable that is Minterest is unique in that it is based off of TVL. Its capability and its potential for generating greater yields is entirely based on TVL, because the more liquidity, TVL, by the way, it's total value locked. So essentially it's the total amount that's deposited onto Minterest. So as the number of deposits increase in aggregate across the whole, what happens is Minterest is able to generate more fees. And when it comes to the generation of more fees, it means that our users, our liquidity providers who are supplying, depositing, or they're borrowing, can both benefit from that, because all of that fee value goes right back to them. And the way in which this is done at Minterest is what we do is the way we distribute those fees is through our token, the Minty token itself. So the base of the process is like this. You're lending and borrowing on Minterest, and you get normal yield. So if you're supplying USDC, you're getting USDC as yield. In addition to that, you get the Minty token. So our token, you get the Minty token. Now, what you can do is simply toggle on governance participation. And what that does is it stakes the token that you're receiving for supplying, for depositing. It stakes it into governance. And then you get a proportion of that fee generation, that fee distribution, right back to you. And the way that then works is the fees that are collected purchase the Minty token on market. It's a buyback, buys back the Minty token on market, and then it distributes it to you just for staking. You don't have to do anything except for participate in governance from time to time. Otherwise, you can sit back and just passively earn those tokens. And so this is the mechanism that we use. It's through a buyback mechanism. So the token itself is a method of it's a voting token, and it also is a way in which we transfer value back to our users. So it adds additional utility to the token, and that's the gist of how our system works. In addition to that, Minterest has the ability to capture more fees than other protocols in the space. And so typically there are two ways that fees are generated. One is, there's a borrower, as we mentioned, who's paying an interest rate to you as a depositor, and the depositor is earning an interest rate too. There's a little bit of a difference. It's a small spread. I'm kind of exaggerating here, but there's a spread there. That part is captured as a fee. The second is through flash loans, and that's basically it. But there's a third one that no one else captures, that Minterest does, which is actually 5x the total amount of fees that others can capture. And that is through the liquidation process. So typically what happens with lending protocols, you have these third parties, they're called liquidators, sitting on the outside of the protocols. And when someone borrows from Minterest, what happens is they have to back it with collateral. So if you're borrowing $50, you need to back, let's say, $100 of collateral, maybe a Bitcoin. Now, what happens if Bitcoin's value drops? Your position may become insolvent. So in that case, liquidators sit on the outside to buy out that collateralized position at a discount. They sell it on market at market price. They pocket the difference. And this happens across the board. They're always sitting on the outside of the protocols. But that means that's where all the fees being extracted to. It's going outside. Minterest manages its own liquidation process. So it's able to capture all those fees. So it's able to tap into another set of fees. Number two, though, on top of that, that's the first piece. But the second part that's more important as well is that counterintuitively, by handling the liquidations ourselves, we're actually protecting liquidity providers or depositors and borrowers. The way that works is that typically the way in which you incentivize these liquidators is they get to profit, right? They buy your tokens at a discount, they sell it on market at market price. They're given an option or a range of how much they want to liquidate you. At Minterest, so meaning that if they need to liquidate you $10, but they can liquidate you up to 50, they'll liquidate you $50 every day of the week, even if you only need to liquidate $10, right, to be back into a position of health. Minterest, though, says we're not going to liquidate you $50. We're going to liquidate you just enough to bring you back into a position of health, meaning we keep you on the system. We don't want to liquidate you away. It makes no sense because Minterest is built for long-term liquidity growth. And so by handling liquidations ourselves, counterintuitively, again, we're supporting our users.
No, that's a great explanation, because when you get third parties in there that are handling liquidations, I'm sure their number one job is to liquidate everybody and get as much profit as possible, which is no fun if you're, which is why it's nice to be able to lend stable coins and you can still get a yield on. You won't have to worry about getting liquidated, for the most part.
That's exactly right. Actually, a very short story. I met somebody 2 years ago at an event, and I was talking about Minterest, and he got so angry with me when I talked about Minterest. Why? Because when I was telling about what we do, the day before, he had been liquidated on a competing platform of $30 million and he was like, that was his entire position. And so we were talking after I calmed him down a little bit. I was telling him about how Minterest works, and he ended up realizing if he had been on Minterest, his liquidation would have actually been half, meaning he would have still been on the protocol and had some capital. So that's just an example, of how it works.
No, that's really good to know, because I didn't know that you could just get liquidated, but just half. Usually liquidated, it's like your account is zero and there's no coming back. So that's amazing to hear. And now DeFi, there's so many different blockchains and there's different value locked in each of them. And we're still at the point where there's some isolated silos. It's not as easy to there's a lot of TVL on Ethereum, but then there's also Solana. Now there's all these layer twos, Mantle, ZK Sync, Linea, Mantle Network, all of these things that are coming out. Is there a plan to find an easy way to be able to borrow on one chain, lend on another, or get that liquidity, make it not fragmented so that the spread is better, the returns are better? You sort of make one holistic ecosystem of different chains to make DeFi just better overall?
Absolutely. And you've hit on exactly what we're trying to do at Minterest. So the future is for us, when we look at these L1s and L2s launching, we are seeing fragmented liquidity. At this point, it's over $25 million of fragmented liquidity that's sitting outside of Ethereum. And so we are looking to unify that. And we believe lending protocols can do it if done in the right way. So Minterest right now, we're working with Layer 0, kind of as a Layer 0 is it's a protocol that's a sort of a bridging protocol that allows you to transfer tokens from one chain to the other. And on Layer 0, they have a liquidity pool called Stargate. So they have hundreds of millions of dollars of USDC and USDT sitting in there. So we partnered with them. And what we're going to be doing is deploying Minterest across different EVM compatible blockchains. And the idea is that at the end of this, towards the end of 2024 into early 25, we're going to enable true cross-chain lending, meaning you can borrow on, let's say, Polygon, you can be lending on Mantle, as an example, right? And it'll just work seamlessly. So you can do that. And that helps to then bring this world of fragmentation, hopefully back together again, right? Using Layer 0 in the middle. And kind of speaking of that, Ashton, we just did launch on Mantle Network on January the 4th. So maybe I could tell you just a little bit about how that experience also went as kind of our first real multi-chain deploy. It was actually fantastic because within the first week of deploying on Mantle, we had over 7,000 unique on-chain suppliers or depositors. So 7,000 unique wallets were actually supplying on Minterest. It was freaking crazy. It was amazing. And it continued to grow even today. In that first week as well, even our top line numbers grew on Twitter, Telegram, Discord, somewhere between 60 and 100%, depending on the platform. We achieved over 2.7 million TVL on Minterest within that 1 week as well. It was just fantastic in terms of the kind of attention that we also got. Crypto Coin Show, you guys covered us. We were covered by Bybit Exchange, by Mantle Network, Box Mining, Ivan on Tech, and a few others as well, who were all utilizing our protocol. And it was just fantastic. It was a great experience for us. And so, we just came out of the gates at this point on Mantle, and we have a lot more to do from a feature set perspective. I can talk about that in a second, but just wanted to cover that. It's something we're really excited about.
Yeah, no, that's very exciting. And just right before that, you mentioned about the layer 0. That's one of the most promising sort of cross-chain implementations. I didn't know that about the tying in with that technology. I feel like that's really good to hear. I think people are very excited about not just partnering with best multi-chain technology, but being able to borrow on one chain and lend on the other. And I did see, and I did help cover the Mantle Network launch. I was very impressed. I had no expectations of how many hundreds or thousands of people were going to use it, but to have 7,000 unique wallets in a week jump onto a lending protocol, probably some of them experienced, probably some of them for the first time, because they realized that the barriers to entry are being lowered to be able to lend Ether or stablecoin, sort of touch their feet into DeFi for the first time. It's very exciting. So yeah, congratulations. And it looks like you guys are very early on. I know you've been working on this for a while, but sort of the main launch still hasn't happened yet. With the Minty token not really trading, I believe those 7,000 unique wallets are earning Minty token, but it's actually not even out yet. So it's really not into the mainstream yet. Is that right?
That's absolutely correct. So you're right. So basically on Mantle, just to give you some perspective of even the 7,000 unique users, we entered into the top 10 on Mantle by user base within that week as well. So I think someone covered us. Basically, we were ranked number 7 at the time. That was only when we had 3,000 users. And so if I looked at those numbers, we would have been number 4 at that on Mantle in that first week. Pretty crazy. But you're right that the deploy on Mantle is very interesting, because if you're depositing on Mantle on Minterest, on Mantle, you're earning the Minty token. You're right, the Minty token is not yet live, but you're also earning. We have a second reward token that you're also earning. That's the Mantle token, MNT. So you actually get dual rewards for supplying, and I'll talk more about our features in a second, but other features coming up in a second. But yeah, you get dual rewards in that, and for both of them. But we are planning for Minterest, the Minty token, to be live and tradable by the end of March or very beginning of April. That's our plan right now. So for the time being, our users are basically saying, let me just earn this before it is liquid. And I think they've been very excited for that.
Mm-hmm. That's incredible. And yeah, the Mantle Network has been one of the strong layer 2s that I've been following along. I think it's a great first chain to partner with, as I'm guessing you guys are going to be aggregating the liquidity of many layer 2s. Mantle seems like a great first choice, and it looks like that. And I've never actually used a DeFi protocol where you're able to earn multiple different tokens, different ecosystems for supplying, you supply some Ether and all of a sudden you're getting Minty and Mantle. That's the first time I've ever done that. And I did contribute a little bit to it, which I'm still supplying right now. And from what I understand, although the Mantle social campaign is over, you can still test out Minterest right now. Is that possible to still, for people that they missed the social campaign, but they can still test it out and before Minty goes live?
You're absolutely correct. So basically, there was this large marketing campaign that was run on Minterest that was operated by Mantle Network and Bybit, right, during that week. But fundamentally, nothing has changed. Right now, you can still earn high APYs. I think it's over 20% on certain markets, and nothing there is actually changing. When it comes to, we'll have new features that will feature new APYs, which I think will also be exciting. I'll talk about that in a second. But when it comes back to Mantle Network, just to give you some stats, we do see Mantle Network as a major player moving forward, because when it comes to their treasury, they're sitting on over $2 billion of treasury. It's crazy. They have an eco fund, which is $200 million. And they have two token assets which are local to Mantle. One is called it's an LSD or it's a liquid staking token, I should say, which is called METH or METH. And that so they have over $400 million worth of that token. And they have, I believe it's between 40 and $60 million of their native stable token called MUSD, which is backed by Ondo Finance. These are both yield-bearing tokens, right? So they're really pushing it. But the point is that they're well capitalized and they have a vertical integration with Bybit. So, if I think of it as an analogy for the future, it's very similar, Bybit and Mantle are very similar to Binance and BNB Chain, right? So it'll allow as a user base grows and there's integration improves between Bybit and Mantle, we'll have more users on Mantle. And so I think this is just the beginning for their network.
Mm-hmm. That's good to know. And 2 billion, that's a lot. And I can imagine when Minty's trading, Mantle and Bybit will probably have something to do with it. So I'll be watching for that. And now you mentioned maybe there's new APYs, there's other things that are coming. Obviously, this was a huge campaign in January 24 here to kick off the year. Incredible so far, but I'm guessing you guys are not done yet. Do you have any insights into what are the next steps to incentivize more people or to get more people involved prior to the launching of the Minty token?
Absolutely. So, prior to the Minty token going live at the end of March, early April, we have three new features, which I would say are all APY generating events for fresh liquidity, which I think will be very exciting. This is the first time I'm talking about it. Like we haven't really actually talked about it in detail because our marketing team hopefully won't kill me because we'll be doing little mini campaigns over the next couple of months. So anyway, but I'll tell you a little bit about what we're doing. So the first thing is we are going to be listing two new token markets. I mentioned Mantle's native tokens, METH and as well as MUSD. Both of those are going to be listed on Minterest in the coming weeks. And with that means fresh APYs in both Minty and MNT. And just to give you a sense, I mean, on our first day of launch, APYs were initially started well over in the 1,000% and probably dropped down to about maybe 50 to 100% the first day. So it was pretty high APYs for those coming in, and you're getting the Minty token and the MNT token. That's the first thing that we're going to be doing, which I think will be really exciting. The second is we will be enabling. So right now, Minterest is not fully deployed. The whole feature set's not fully deployed. So the second part of it is that we'll be enabling borrowing. And so the borrowing side of things, when you start to borrow, it means, again, you're taking your deposit and you're putting it down as collateral to then borrow. So, as an example, you put down $100 of wrapped ETH and you can borrow, let's say, $50 of another token USDT. We'll be enabling borrowing to begin as well. And when you borrow, there is an incentive there initially. So you will also earn Minty and MNT tokens for borrowing. So that's the second piece. And the third is Minterest will be launching. So Minterest has, one thing we haven't talked about, Minterest has yield boosting NFTs. So we have an NFT play. They're not just pretty to look at. They are pretty, but not just that. They serve a functional, functional nature in the protocol. So these NFTs, if you hold one of them and you're depositing on Minterest, you're supplying on Minterest, or you're borrowing, you're getting the tokens Minty and MNT as emissions, right? As reward tokens. If you hold the NFT, then you will get a boost in those emissions by between 20 and 50%, depending on the rarity of the NFT. Now, these NFTs have been deployed on the Ethereum network. We are going to be providing a front-end bridge, like a bridging application on top of the Minterest application, which will allow you to bridge those NFTs over to Mantle if you already have the NFTs. And if you don't, well, that's okay. We'll be running a campaign so you can earn them or win them basically through some of the cool things that we're going to be doing on that front, including deploying some of the NFTs onto Mintle, which is Mantle's native NFT marketplace too. We'll be running some campaigns. There's a lot of alliterations with Mint, Mant, A lot of M's in there, right? But so that will be and that will allow for additional APY boosts, essentially. So these are each of these mini campaigns. People, I think, will be pretty happy whether they came in earlier or later. There's always an APY opportunity leading into when Minty becomes live as a tool.
Very cool. That's some very exciting news. I would love to follow along as closely as I can, because as you mentioned there, when the Mantle campaign started, the APYs were starting at like 1,000%. The more people that get involved, the share has to go around and the APYs go down. But if you're saying that there's going to be the METH and the MUSD coming in, and there's not a lot in the pools, if you're the first one to get into the pool, the APY is probably going to be significantly higher.
Exactly correct. And on top of that, our team is struggling with something. We're having to update our user interface to show all the new APYs, because it's not just that. With MUSD and METH, remember, they're yield-bearing stablecoin or yield-bearing assets, meaning you'll also be earning an interest rate in those tokens too. So it'll be, you're earning the emissions in Minty, MNT, that token itself, right? And then on top of that, when borrowing is enabled, you'll be earning native yield. So they're like right there, they're 4. And then on top of that, don't forget the NFT boosts. That's 5. That's 5 forms of yield.
That's crazy. And yeah, whenever I go to the bank and I'm looking to borrow, they're definitely not offering any token yields.
Not, right?
They want an arm and a leg, and I get nothing in return except the principal. So I'll definitely look forward to when the borrowing goes live and those new functions and the NFTs as well. I'm guessing there's going to be some social campaigns probably in the near future here. I'll try to keep my audience updated on when that happens, so you can win the NFTs, and then I guess that boosted on even more on top of all these other faucets that you guys are adding into the DeFi campaign. So it's very cool. And it sounds like it's been very successful so far. 2024. Hopefully the ETF, Ethereum ETF, hopefully next, and more interesting DeFi. The trickle down of new capital into DeFi also helps you and your team work out. But it sounds like you guys have built out the mechanisms for a long-term sustainable future.
When it comes to the Minterest roadmap, we're looking, at least right now from a fundamental functional roadmap, it's well over a year internally and into 1.5 to 2 years at this point. Now, we all know in crypto, a year is like a decade. So things can shift, things can change. But the point is that we have our blueprint of what we want to do, what we're targeting. So, and it's all about positioning Minterest in a place of strength. So that way, as we move into, say, 2025, we're looking that far out. We have that ability to tap into multiple chains. Doesn't matter where you are. You shouldn't care. We shouldn't care. We just make sure we enable it for you, right? And so you can lend and borrow anywhere, earn high yields. And that means that anywhere we deploy, we should be the leading lending protocol there, from the perspective that if you're looking for yield, you should be coming to us. That's just the nature. That's how we build.
Sounds great, Kyn. And for people that want to test out the protocol or follow along with the new updates, launches of the pairs, the NFTs, what is the best way, or where are the top communities to follow along with the Minterest updates?
Absolutely. So I would say follow us on our Discord. So just type in Minterest, basically. It's Discord Minterest. And on Telegram, it's Minterest Finance. So just look us up there. Twitter, though, is probably the easiest place to initially kind of get access to information. And it's just, it's x.com/Minterest. Just look up Minterest and we'll be right there. So hopefully pretty easy. Otherwise, you can always go to our website, Minterest.com. Everything's Minterest. So you shouldn't be hard to find us.
Amazing. And I'll leave the links in the show notes below as well. Make it easy for people. Thank you so much for your insights into DeFi and for innovating DeFi into these new mechanisms, making it more efficient and putting more capital, reinvesting it into protocols and into DeFi so it can continue to grow. I feel like we're on the precipice of something very large, and I have high hopes for 2024 for Bitcoin, for DeFi, for you guys. And thank you so much for taking the time. Let's definitely follow up in the near future, Kyn.
I'm looking forward to it. No, thanks a lot, Ashton. I think we're going to have a good 2024. I don't know what the prediction is going to be, but fundamentally, we can see with the ETFs now live or moving live, it shows that we are now no longer just pure wild west. There's true credibility for our space, and so I'm hoping that it benefits every one of us. So yeah, looking forward to it, man, and looking forward to it next time we do this talk.